Well, if they were going to be negative for a long time, you better own equities, or you better own something other than debt. I mean, it's remarkable what's happened in the last 10 years. I've been wrong in thinking that you could really have the developments you've had without inflation taking hold. But we have 120 odd billion. Well, we have some almost very high percentage in treasury bills, some in other, and some just in cash. But those treasury bills are paying us virtually nothing now. They're a terrible investment over time, but they are the one thing that when opportunity arises, it will arise at a time, and maybe the only thing you can look to pay for those opportunities is the treasury bills you have. I mean, the rest of the world may have stopped. And we also need them to be sure that we can pay the liabilities we have in terms of policyholders over time. And we take that very seriously. So if the world turns into a world where you can issue more and more money and have negative interest rates over time, I'd have to see it to believe it, but I've seen a little bit of it. I've been surprised. So I've been wrong so far. I do not think that, I don't see how you can create, I would say this, if you can have negative interest rates and pour out money and incur more and more debt relative to productive capacity, you'd think the world would have discovered it in the first couple thousand years rather than just coming on it now. But we will see. It's probably the most interesting question I've ever seen in economics. Is can you keep doing what we're doing now? And we've been able to do it. The world's been able to do it for now a dozen years or so. But we may be facing a period where we're testing that hypothesis that you can continue it with a lot more force than we've tested it before.
Hey guys, what's going on? This is your boy Christian Israel, and you are tuned in to New Creation Capital Podcast, a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. Where we go one, we go all. This is a new you, a new future, and a new creation. Happy Wednesday. It is Wednesday, May 6th today. There are no Taco Tuesdays or Cinco de Mayos or May the 4th be with you today. Today is just May 6th. It is hump day. Today the stories are awesome. We are going to talk about, so hang around for today's stories. We are going to talk about 5 reasons why institutional investors refuse to join the crypto sector. And is there a perfect storm brewing for Ethereum? Also, is there the holy grail for derivative traders? Holy grail. And is Bitcoin staging a comeback? Don't call it a comeback, guys. So thank you for those who are tuning in on our Apple Podcasts, our Breaker, Pocket Cast, Google Play, Spotify, and of course the Anchor platform where you can support and partner with us or shoot me a message. This is episode 41. Yesterday's episode was pretty cool. Episode 40, which is talking about a Forbes article about is Trump destroying the Federal Reserve and is it good for Bitcoin? Also, guys, you can, of course, find our videos that you are watching right now. Subscribe on YouTube. Please hit the little bell right there. That's get notifications. You can come here and just get straight the videos. We're at 41 subscribers with day 41 videos. So 1 subscriber per day. Thank you guys. Who is going to be the next subscriber? Shout out to you guys. Also, real quick, just to let you know, when I hit 100 subscribers, I will be giving away a Nano Ledger to the people who write in the comments about that so we can get it going. Nano Ledger, and I might give a second prize. We'll see. Okay. Also, you can hit us up on our setup. Well, yeah, let's talk about the Telegram group. You can hit us up on the Telegram group at New Creation Cap. As you can see here, we're doing signals. We're talking buys. We're doing what we got to do here. So you can hit the little right here. Hit that little button right there. Join Telegram group. New creation cronies. Hit us up. Let me know. Also, you can just converse with me on Twitter at New Creation Cap. I love to speak with you and talk with you. In fact, let's see who did us a notification just now because that just popped up. All right, so Ben Jitsu liked a tweet to amend the Federal Reserve Act of 1913 as amended and the internal code. By the way, this is talking about the Nasari that I put out yesterday, referring to the at-bearable bull who hit that up. So thank you. You know what? He's liked a lot of things. We're going to give that guy a follow today. Shout out to the follow. Thank you for the latest tweet. We will follow you. Also, you can hit us up on Publish OX, New Creation Podcast. This is a cryptocurrency-based blog website, okay? You can come here. If you come here, you can actually see our podcast where you can listen to your favorite platform right here, and then also the video. So it's a place you can get both of them. And not only that, you can find amazing other sets of articles there, okay? So let's jump into the market and see what is going on at this moment. We're going to go to Coin360 and let it load if it loads. Okay, BTC is pumping. 92.1265 up 3.42% as we are getting closer to the halving. ETH is up 1.65. Now 1.53. XRP up 0.2 or at 22 cents flat, up 1.23%. And speaking of Bitcoin, we are exactly 5 days, 10 hours, 19 minutes, and 56 seconds from the halving. Of course, we talk about this where mining Bitcoin is like mining gold. You get paid per block at this moment. And right now, miners of Bitcoin get paid 12.5 blocks which they mine, and in 5 days, 10 hours, 19 minutes, and 38 seconds, they will get their salary cut in half to 6.25 coins. This is supposed to be done for against inflation, right? So supply and demand, the supply will be cut in half, so increase the demand, hoping for a pump. That is what they're looking for. And speaking of pump, let's talk about dump. Okay, so here, Warren Buffett just made this group of traders almost $200 million. And I'm going to touch on this real short, okay? $200 million because he dumped on Saturday. He dumped all his American airline, his United, his Delta, his JetBlue. He basically dumped all his companies, okay? And then a group of investors were shorting, all right? Shorting means to be a bull. It means to go against, means you're betting against the actual market. And so these guys bet that basically Buffett was eventually going to drop it, right? That eventually he was going to share. So it says here, we could see continued short selling in the American Airlines, United Airlines, and Delta Airlines after Buffett's comments that he wrote on Sunday. And you guys saw Buffett talking in the intro how he basically is wrong, right? So I just thought that was interesting. That's why I put the Buffett video in the beginning of this clip so you could see, okay? I think that's pretty much it. Hey, sometimes you can make a lot of money shorting, and Warren Buffett just made these guys, this group of traders, $200 million. Shout out to you guys. Congratulations. Let's jump into the story of the day. Well, one of them. So 5 reasons why institutional investors refuse to join the crypto sector, right? This is a continuation of Warren Buffett. Warren Buffett refuses to do Bitcoin. So he says, Marcel Peckman of Cointelegraph wrote this article 8 hours ago. So right at the jump of this morning. And it says here, crypto investors have long believed that institutional investors would lead to the next Bitcoin Moon event. But this is false. This is a false narrative built on nothing but hopium. So we know, you hear that a lot in this group, that if you are a Bitcoin maximalist, right? I think most people that are just Bitcoin or nothing are called Bitcoin maximalists. That means that is the only coin, which I'll leave that alone. If you're just a Bitcoin maximalist, thank you for watching this. Let's talk about this article. And if you disagree with a couple things I'm going to talk about right now, basically institutional investors, which are the big dogs, right? Those are the people who put money in there. They're saying that this is a false narrative. So it says for the past 2 years, crypto media outlets and Bitcoin BTC advocates have placed heavy emphasis on the need for institutional investors to embrace the cryptocurrency sector. The oft-stated belief was that institutional inflow would lead to mass adoption and an incredible spike in the value of crypto assets as a whole. Fast forward to the present, and the total cryptocurrency market capitalization has reached the $750 billion all-time high seen in late 2017. We're going to talk about that 2017 correlation soon when we talk about is Bitcoin back, by the way. So you definitely want to stick around because Bitcoin people, this is your show. The slow recovery of crypto prices raises a few hard-to-answer questions. If institutional funds have been flowing into cryptocurrencies, why hasn't there been a significant price increase over the last 3 years? Either there is almost an infinite sell pressure, which shouldn't be a barrier considering the total market cap just hit $248 billion. By the way, before the crash, it was over $250 billion. So now it's at $248 billion as of this morning. Or this theory has that institutional investment will pump crypto prices does not hold, right? So either it's going to help or they're going to hold or they're going to put in, it's not going to make it. So here are 3 reasons why institutional investors have yet to join the crypto market. Reason number 1, the on-ramp remains too steep. Investing in Bitcoin, the top listed crypto assets on CoinMarketCap, remains a significant hurdle for large mutual fund managers, especially when considering the perceived risk of Bitcoin. Add to this additional purchasing steps necessary compared to more traditional assets, and the process of just buying crypto is off-putting. Some funds' internal regulation also does not allow investments of specific products, while others are ousted by the low liquidity in regulated and approved venues. Number 2, presence does not equal profit or guarantee a bull market. The arrival of presence of institutional investors does not necessarily translate into buying pressure. Renaissance Technologies, Medallion Funds' recent entry into CME's Bitcoin futures market is a perfect example. Furthermore, it should be noted that since CME futures are cash settled, they don't necessarily involve any Bitcoin trading activity. That is true. More importantly, a hedge fund can also open short positions. This is also true. We see it with BitMEX. They bet against their traders. Investors should wonder, why should they celebrate a $10 billion fund potentially entering the space looking to bet against Bitcoin's price? Gosh, that is such a good point. That makes no sense to me. This is why I'm not really big on Bitcoin. I trade Bitcoin again. Of course, we hold some. You got to hold Bitcoin. Let me make sure I say that. But I'm not saying if Bitcoin goes to $1 million, great. I'm going to hold it because I don't know. But I'm just not as confident as I am in utility tokens because right now Bitcoin is just for traders. Okay? Yes, there has been a significant growth in the crypto derivatives market, and we're going to talk about the derivatives market too. And these are preferred instruments among institutionalized size investors, but they remain incredibly complex for average retail investor. Building positions via futures might come at a high cost as contracts expire every 2 months. Every 2 months, so January, February, March, April, May, June. So we're in that right now. Furthermore, this would mean investors would take on the risk of trading at a negative premium at the spot market, as there is usually a cost involved switching to the next expiry. Simply put, futures contracts are not designed for long-term holding. Compared to traditional markets, the crypto sector is too small. While Bitcoin does produce amazing returns, there are other reasons why a $94 trillion industry will not just blindly buy cryptocurrencies anytime soon. Okay, so that's point 3. It says here, no matter, that's a chart we want to see. All right, so Bitcoin, 176 billion. Jeff Bezos' family, 165 billion. So one person, literally Jeff Bezos, could almost buy all the Bitcoin. Wow. Look at that. But that also, but let me wait. That also says there's also another big chance for Bitcoin to grow. That's in the beginning stages. So Bitcoin has already passed Jeff Bezos. So we can look at it positively like that, okay? I'll give that to you. There's a positive thing here. All right. No matter how many times one has seen that crypto chart, it remains pretty impressive. The crypto sector, 248 billion market cap, is just a speck among capital markets. Currently, Japanese yen banknotes in circulation amount to 1 trillion, and this does not include bank deposits nor treasuries. The world's 20 largest asset managers combined oversee 42.3 trillion. A mere 0.5% investment in cryptocurrencies would end up at 211 billion, equivalent to 84% of the total market cap. Even though the past few years have shown that crypto can provide an infinite upside, one must concede cryptocurrencies are not even close to being at the same playing field as traditional markets. Grayscale Investments manages $3 billion, the largest available publicly traded vehicle for institutional investment in cryptocurrencies. Despite such a significant amount, it remains insufficient in the eyes of the world's largest money managers. I'll say this, take time, in due time, in due time. Oh man, if I want to go into the Vanguard Group, BlackRock, Capital, Wellington, the background of Berkshire, background of Fidelity, and who I'm going to say this. Half of these guys that you see here, by the way, owners of JP Morgan Chase, owners of Bank of America, look into it. They own some form of way are behind Ripple Labs. I'm just going to tell you that. This is not a Ripple day, XRP day. We're actually not talking about it today. We're talking about Ethereum and Bitcoin, but just look into that. Okay. Top sellers, bank, credit cards, insurance, and brokerage companies represent a significant portion of the portfolio for almost every large asset manager. BlackRock, State Street, Vanguard, Fidelity, Wellington feature as the top 20 holders of financial stocks. Banks are relevant players in this field as HSBC, JP Morgan, Goldman Sachs, Deutsche Bank, BNP Paribas, UBS, and Wells Fargo figure among the world's largest funds managers. The relationship goes deeper as banks are relevant investors and distributors of such independent mutual funds. This entanglement goes even further as large financial industry players dominate equities and debt offerings, coordinating investment funds allocation in such deals. There's not much room to be gained for any mutual fund manager to sit at the wrong side of the table when the subject is traditional finance industry. At the moment, cryptocurrencies are in no way a threat to Visa, Wells Fargo, Schwab, or Charles Schwab. It doesn't matter how well decentralized finance is performing or how stable or sizable Bitcoin transactions are now. Therefore, the question investors should be asking is, what is preventing institutions from engaging, and what would it take to get them to invest in cryptocurrencies? What will it take? Former regulatory pressure remains a hurdle, so they say. Former Commodity Futures Trading Commission, the CFTC Chairman J. Christopher Giancarlo admitted in October 2019 that his agency deliberated with the Treasury, the United States, the SEC, and the National Economic Council to suppress Bitcoin's incredible 2017 rally. They're going to suppress it while they get their stuff together. This government-backed plan culminated in December 2017 as the CME and CBOE both listed Bitcoin future contracts, one day after Bitcoin's famous 1970 top. In other words, they shorted the market, guys. That's why Bitcoin can be controlled. It can be controlled by any government entity. They can't crash Bitcoin and take it off, but they can short the heck out of Bitcoin, right? As you saw, one person right now could crash the whole market, Jeff Bezos. And we're printing another $3 trillion as the U.S. government alone over the next 3 months. So don't you think, just putting it out there, I'm just putting it out there, Bitcoin is not untouchable whatsoever. Yeah, transactions, and in fact, transactions get higher. The more people go, the more expensive it is. Bitcoin, you're never going to crash the banks, guys, period. The banks have been around since the 1400s. You might get reset, you might get bankruptcy, all they'll do is just reset everyone's debt if they have to. I'm just going to point that out. Anyway, in May 2019, U.S. Member of Congress Brad Sherman called on colleagues to outlaw cryptocurrencies. President Donald Trump tweeted back in 2019, "I am not a fan of Bitcoin and other cryptocurrencies which are not money, whose value is highly volatile and based on thin air." Well, I think this is funny, okay, because I'm going to be honest. What is the U.S. dollar based on, right? The U.S. dollar is based on thin air. Well, they say it's backed by the government and the military. Which is a good point, right? Because they just use it as a threat. But Bitcoin really is backed by nothing. Not Bitcoin, sorry. I mean, Bitcoin technically is backed by nothing, by the people, which is basically all money, right? Because really, we only give gold. Everything's really backed by nothing. I'm just going to put that out there. Everything is. It's all about supply and demand. If people want it, the supply goes up. The supply gets shorter. Demand for it goes higher. That increases the expense and the price of everything. So really, the only reason gold has value is because we give it value. The only reason the U.S. dollar has value because we give it value. The only reason Bitcoin has value because we give it value. Nothing is worth anything. Everything is worth nothing. The reason we give humans value because we value life. Well, some people do. Most people do, right? You value life, therefore it has, technically it has a price, right? But what we can't, even people try to sell. There was a movie called, with Justin Timberlake about time, right? He had time on his arm. people pay for time because they value time. They could actually get more time in their life by purchasing it, right? And the scripture says, can you add 1 hour to your life by worrying? No. So what do you value? And that's, so basically everything is out of thin air. I mean, yeah, gold is out of the ground in a sense, and we value it, and copper, and we can go on and on and on. But really, nothing is worth anything. That's deep. Nothing is worth anything. Quote me on that. Shout out. All right. So most recently, the U.S. Secretary of Treasury, Steve Mnuchin, promised significant new requirements on cryptocurrencies. In October 2019, U.S. senators went as far as sending out a letter to 3 companies backing Facebook's Libra project, citing risks the project poses to consumers, regulated financial institutions, and the global financial system. Hey, Libra, back down is what they said. Despite Bitcoin not being widely regarded as a competitor to fiat money, it's almost sure that it would be if the cryptocurrency achieved $1 trillion market cap. Yeah, we'll see about that. I don't think it will ever be a competitor to the banking system. I think it will be a competitor to the scam of the banking system, where people don't need to put their money in a corrupt financial institution, right? And watch for the video at the end of that. We'll talk about that. Well, not me, but the guy who speaks at the end of these videos. I show that, okay? So liquidity and ease of access. Bakkt has a product designed to ease mutual funds, significant barrier to Bitcoin's investment. So Bakkt is not for Bitcoin, guys. Just gonna put that out there. Bitcoin futures contract with physical delivery allows purchases through an entirely regulated venue, including the custody process. As reported by Cointelegraph, Bakkt is controlled by the Intercontinental Exchange, the owner of the New York Stock Exchange. Right? We already saw that. Clients willing to trade such products must go through their regular brokers used for stocks and futures. If you use a broker for Bitcoin, you do not own your Bitcoin. You're buying it on Robinhood or Fidelity or any of these platforms. As people say, not your keys, not your Bitcoin. If you don't have your Bitcoin on your own wallet, you don't own it. You own no different than owning liquidity, right? No, not liquidity, just liquid, I guess, right? It's no different than saying you own gold on paper. But if you don't have physical gold, you don't own any, right? I think that's so important to understand. And this is what getting into the space, I think getting institutional money into the space, for me personally, I think it's a bad thing. I think it goes against everything that Bitcoin stands for, guys. If Bitcoin is standing to go against the institution and be a store of value and to be a payment industry, institutional money, institutional adoption is bad. It's bad for the space. Let me know if you disagree or not, because I want to hear. But that's just my personal opinion, which is why I personally back things that say, hey, we're going to use the banks, as people will say, bankers' coins, or we're going to use this DeFi platform, or we're going to connect everything through a chain link or staking or through a loan process. At least we know that that's really what they're after. They're after to be like banks. Bitcoin is trying to destroy in this anti-government, anti-banking system coin. It's not going to work, man. It's not going to work. But it doesn't mean it will not hold value. I think that's important. But Bitcoin is a system built to fail. Okay. For ages, real estate, awkward backlash. Let's see. After the launch, I don't think we really need to talk about Bakkt. This article's okay. Here we go. Crypto can and will scale without institutions. Okay. Now this is the point. Here we go. The intention of this piece is not to turn away investors from Bitcoin cryptocurrencies. Pundits and analysts with no real market experience have promised impossible scenarios for too long. If the Bitcoin market cap is still under 1 trillion, rest assured you arrived early to the party. That not necessarily is a good thing. There's a possibility and unlimited upside for this asset class. True. And institutional investors' entrance will almost certainly happen gradually than suddenly. Right now, it is essential to realize that a multi-trillion-dollar mutual fund industry hasn't got strong enough reason to invest in such a nascent asset class. Crypto does not need the mutual funds industry. It is the other way around. Bitcoin is money for the regular people and an investment by itself. Bongo, bingo, bango. Absolutely. That's literally perfect, right? You want people to be on its own. You want Bitcoin to be on its own. Thank you, Marcel Petchman. Great article. Now it's your turn. Tell me what you think. Write it down below. Let me know down below what you think about that, okay? Now, speaking of Bitcoin, let's talk about, is there a perfect storm brewing for Ethereum? Yeah. I was just trying to decide just now if I would stop this podcast, but I'm just going to fill you up with knowledge today. These are some deep, deep stories. And tomorrow, by the way, speaking of tomorrow, I will be interviewing somebody. I have a special guest coming on. She is the VP of the head of national sales for a crypto hedge fund. And a crypto hedge fund that's made some pretty big noise recently. She will be on here tomorrow. We will discuss financial freedom, guys. You don't want to miss that. We will discuss, her initials are KS, that's all I'm going to say. And she was from a nice, big hedge fund, crypto hedge fund. And I think it's interesting to hear what she has to say. And we're going to discuss financial freedom because that's kind of what we are all in here for, is financial freedom. So speaking of financial freedom, crypto wells are showing there's a perfect storm brewing. This is from cryptoslate.com, written by Nick Chong. And it says here, okay, let's see. We're going to start right here. Okay. Ethereum's wells are flashing a swath of bullish signs. In his analysis of Ethereum's biggest wells, Cochrane made 31 key findings, save for some practically. All of them can be interpreted as bullish for the cryptocurrency. Some keys are as follows. Now, I'm not going to go over this whole article. We're just going to touch on these 5-6 things, okay? And then we'll move on. I will put a link in the description to this. Wells are accumulating ETH. Existing wells have increased their position by more than 4% in the last 6 months, he wrote, which reportedly amounts to $550 million worth of ETH purchases. This sum is important because it rivals the roughly $600 million in new capital influx Bitcoin was estimated to see this year. Money is moving into ETH and not into Bitcoin. Some of the world's biggest institutions, Microsoft included, are stacking crypto. In similar vein, Cochrane found that the wallets associated with major players such as JP Morgan Chase, Reddit, IBM, Microsoft, Amazon, and Walmart are accumulating the cryptocurrency. Crypto Slate's report on this facet of Cochrane's analysis is linked. You can find the link below. Ethereum sell walls are being chewed up. The analysts observed that in the past 6 months, exchange deposits grew 5x from 11,000 a day to 55,000 a day. This is normally indicative of a bear market, yet prices have actually increased, suggesting mass accumulation of ETH during this time. Miners are hoarding coins. Ethereum 2.0 is nearing. Miners have begun to hoard their coins, accumulating $230 million worth of cryptocurrency in the past 6 months. Cochrane remained that this is a sign that miners are bullish on future assets, especially in regards to staking. ETH is being used as money. 6.2 million ETH coins are in active circulation, meaning that in the last 90 days, they have passed through a payment processor, payment gateway, or smart contract. This indicates, Cochrane wrote, that the cryptocurrency is being heavily used as money and as gas. Ethereum ICO participants are dedicated. Of the ICO initial coin offering participants in the top 10,000, 97.4% of them still hold more than 75% of their initial ETH purchases. Founders of the cryptocurrency, including Vitalik Buterin, have been holding many of their coins as well. Woo! Now, add bullish fundamentals to the mix. To these bullish on-chain trends, Ethereum recently got a big fundamental boost with the news that Andreessen Horowitz, we talked about this yesterday, a venture capitalist firm known for its early investments in Twitter, Slack, and Instagram, just finished fundraising for Crypto Fund 2. This is a new $550 million fund that will be investing in the following 5 categories in crypto and blockchain. New generational payments, modern store of value, decentralized finance, new ways for creators to monetize, and Web 3.0. Andrew Kang, a venture investor himself, argued that Ethereum is likely going to be one of the biggest beneficiaries, I struggled with that word last time, of the new fund. The investor enterprise a 16Z's assertion that it will be investing heavily in the next generation payment projects as a sign that they will be investing in ETH, the stablecoin settlement layer. Ooh, stablecoin sounds like banks. Sounds like banks. Hey, I whispered to you, banks. Stablecoin stellar. Stablecoin stellar. Stablecoin stellar. Okay. Also bullish, Ethereum 2.0 has moved one step closer with blockchain development. Terrence Tyso recently noting that the Topaz testnet for 2.0 software recently hit a milestone of 100,000 slots. This confirms that the spec the testnet is running is operational and without glaring bugs this far, indicating that upgrade is on track to arrive by summer, as Ethereum 2.0 researcher Justin Drake has suggested. And you can see in his tweet here at Terrence Chain. Milestone, 100K slots, Topaz testnet, 24.4K validators, 3,200 finalized epochs. 90% participation. At Pride Labs controls less than 50% of the network. Some nodes with 300 peers. And then you can see that article right there. Ethereum is currently ranked number 2 in market cap. It's down 1.11% over the past 24 hours. And right at the time of this recording, it is up 1.53% over the last 24 hours. Okay. And ETH has a market cap of 22.87 billion with the 24 hours 16 billion. Okay, so what do you think? Your turn. Are you an investor in Ethereum? We hold Ethereum as one of our largest holdings here. Okay, we believe in the platform and that everything we invest in, by the way, and hold, I believe all of them are interconnected. Where we go one, where we go all, and I'm not just talking cryptocurrency, guys. So let me know in the comments what you feel about that. Also, I think it's so important because this leads us into our next topic. So let me know. And that is this the holy grail for derivatives? And what I mean by that is a crypto messaging platform paradigm. Okay. This is on the blockcrypto.com, written by Frank Shapiro. All right. And just a quick take, because I'm not going to read much of this as we get into the next article, but Paradigm has launched a new service that gives users more flexibility in how they can trade with counterparties. The launch comes amid an increase in activity in crypto derivatives market. Again, we talked about institutional money, right? And here is another step to institutional money. Then we also talked about institutional money entering Ethereum. So I don't think it's not that it's not going to happen. The question is there a use case for it? If the institutional money sees a use case for the coin that they're investing in, they're not going to be shorting and selling. My issue with the Bitcoin and the futures contracts, right, and all this institutional money is that they're trading it, which means up and down. They're not investing in Bitcoin. Okay, these guys are not investing in Bitcoin. They're using your money to invest in your money. They're using your investment Bitcoin money to trade with it. They hold your Bitcoin, then they trade with it to make more money. I think it's so important, guys, to understand that. But they're investing in other coins, which are considered altcoins, which I hate that term because they are alternative coins. That's making the statement that Bitcoin is the coin, and it's not. The others have utility case, right? Bitcoin is Napster. Everything else is all the others, the Spotifys, the Google Plays, the iTunes, right? Those are the quote-unquote altcoins, right? So think of that, by the way. Okay, let's go into the story. Trading message platform Paradigm is launching a new function for derivative trades that aims to be the holy grail of the burgeoning corner of the market. Paradigm allows cryptocurrency traders to negotiate with counterparties and then automatically execute trades to be settled on partner derivative exchanges. Those negotiations can be conducted manually or via automated requests for quotes, which are electronic messages sent between counterparties that outline the terms of the trade. Now, users of the platform will have more flexibility in how they can construct their request quotes, okay? Their automatic requests for quotes. Previously, traders would have to negotiate a futures and options trade separately, but the new service dubbed Request for Quotes Builder will allow traders to configure trades to include options and futures in one trade. Options contracts give traders the ability to purchase or sell an underlying asset, particularly in price, agreed time period in the future. In certain cases, traders will execute on options, trade alongside a futures project, or limit or hedge the delta risk associated with the options trade. Wall Street parlance for an options risk tied to the change in the price of the underlying asset. Okay, so this talks about Bitcoin derivatives heating back up. So we can see here open interest in Durbits Bitcoin options product increased from a recent thorough around 350 million to 670 million on Sunday. And again, I think a lot of that has to do, my friends, with this, right? The halving has to do a lot with money coming in, trying to get as much half. And I don't know, man. We could see it dump. I mean, I know past crypto trading doesn't repeat, but it rhymes. And I think that's important to understand here. So you see that it's going up and it's pumping, but we still haven't hit the mark where we were before the crash. But I think we're going to get there, and we're moving our way back up. We even see here, CME Group has open interest in Bitcoin futures product increased to 339 million, representing a complete rebound from the retreat in open interest since March, in dollar terms anyway. And again, we're still talking institutional money. This is money coming in. So this is all diving into the very first article of the reasons, okay? A contract-based open interest saw steady growth from 4,270 contracts April 1st to more than almost, 50% increase? 60% increase on May 1st, according to data provided by the exchange. So, is this the holy grail? What do you think? Paradigm makes contracts faster. You can just sit there and request a quote and just knock it out with the computers. I don't have to worry about negotiating. So Paradigm takes out the negotiation of the contracts, and I just pick what I want. I mean, that's kind of like trading now. That's a limit versus a market sell, right? A limit sell, you choose the price, market taker, right? You just jump in and give whatever price the exchange gives you. So let me know below. And the last story of the day. Is Bitcoin on a comeback? Don't call it a comeback. Ooh, we've been here since 2009. All right, Bitcoin is staging a comeback reminiscent of the 2017 bubble frenzy, says Viladanda Okay, VH and Olga Karif. Okay. Oh, VH, okay. This was published this morning. So, according to Bloomberg here, guys, on BloombergQuint.com. That's an interesting title. It has been left for dead more than once. Is Bitcoin left for dead? Rise, Lazarus. Written off as nothing but a bubble and denounced as rat poison by one of the world's most famous investors, Warren Buffett. Yet Bitcoin is once again staging a comeback reminiscent of the token's glory days, with evangelists pegging their hopes on a technical event as the new catalyst. What is that technical event? It is the Bitcoin halving. Okay, true believers say the gains are driven by Bitcoin's upcoming halving, or halvening, which is the happening of the halvening, when the reward miners receive for processing transactions will be cut in half. We talked about that. The internet is glutted with second-by-second countdown clocks. Second-by-second countdown clocks. There it is. With the mania and even spurring the hiking in crypto firms worldwide. Crypto firms worldwide. Crypto firms worldwide. Crypto firms worldwide. Narratives in the world of blockchain act like the Force in the Star Wars. May the Fourth be with you guys. They mysteriously move and shake the market, says George McDonough, co-founder of crypto and blockchain investments firm KR1. You shouldn't be blamed for getting a little excited about what's to come. Hey, it's okay. You can be excited. Here's a chart for what goes on in the halving. I'm going to get rid of that. Here's a chart for what goes on in the halving. Says the supply of the world's largest will be pinched off in 2020, which we talked about. So here's some articles. The first halving, 8,189% gain from the first halving. The second halving was cut a lot, but still a big old gain. And the second halving was 2,884%. Wow. That's pretty big. Now, what's the third halving? Are we going to get that over the next year? If we go by that, we're looking at a 500% gain, I think, right? So that's 30% difference between the first halving and the second halving. Okay, so if we take 30%, let's see, we're going to take 30% of that. I'm going to do it with my calculator real quick. Times 0.3, we're looking at an 865% rise, percentage-wise. So that's 8x. Okay, so we'll say a 9x from the price right now. The price right now of Bitcoin is $9,237, and we're going to multiply that by 9x, and they're saying it's an $83,000 Bitcoin is the top based on that. Hey, that's not bad. I'll take an $89,000 Bitcoin right now, to be honest. In fact, as a store of value, I'll definitely take it, but I guarantee you it will still hit a high at some point, and that's the high. And I'm thinking Bitcoin, honestly, will settle around 50 G's. Personally, it can get up to 200 or 150 in that area, but I think we settle around 50 G's, and eventually by the next halving, we're sitting around 100 G's. So, just my personal opinion, and I'm just a guy in his room, so I really mean nothing. Okay, Bitcoin halvings, which slow down the rate. We talk about that. Bitcoin on pair 2 halvings. Here's a price prediction they put. To be sure, many crypto fans also point to the unprecedented monetary and fiscal stimulus unleashed by central banks around the world as a catalyst for prices to advance. Whatever the reason, the recent bull run hype is ushered in return for sky-high prices. Global market investors, Raoul Pal, we talked about this, predicts Bitcoin could reach 1 million to the next 3 to 5 years. That's by 2025. Though the halving isn't key driver behind this prediction, it could be a potential accelerant. It's already the best performing asset in all recorded history. That is true. But now it takes a lot more to move the market cap, Paul. Paul wrote in recent presentation, it was born out of the financial crisis for exactly what is about to come in this crisis. This is literally what Bitcoin was invented for. This is so true. This is make or break for Bitcoin. Jefferies LLC analyst Christopher Wood in his weekly Greed and Fear newsletter recommended investors, including institutions, there it is again, buy Bitcoin ahead of the halving, citing the token's prior price surges around the event. To invest in Bitcoin is necessary to believe the system has integrated in the sense that the supply is truly unlimited, he wrote. The digital token should be a source of diversification precisely because of its true decentralized nature, he said. Venture capitalist Tim Draper predicts Bitcoin could hit 250,000 by 2020 or the first quarter of 2023. Bitcoin adoption will spread because Bitcoin is simply a better currency than any political currencies that are tied to government and political whims. He said, citing fiscal and monetary stimulus as possible accelerations for adoption. And to Antonio Trevecek, AT, co-founder and managing director of crypto lender Nexo, Bitcoin could reach 50,000 by the end of the year. That's where I'm at, implying a 470% surge from current levels. Though the halving may already be priced in, it will lead to a huge appreciation over time. Critics can't disparage Bitcoin as much as they like, but it's because by far the best performing asset of the past decade. We're bullish about its future. AT is seeing huge demand for his firm's product ahead of the coin's halving. We're not hiring because of the halving per se. We're hiring because the halving has been lifting Bitcoin and will continue to do so. Hiring hike. We'll read this. A number of crypto exchanges have also embarked on hiring sprees. Kraken LLC, Binance Holdings Limited are expanding their workforces as OK Exchange and Coinbase Inc. David DJ, the chief executive officer found of Cardiff Wells-based CoinCover, said any market event that impacts adoption is a positive for his business. That's part of what we see. When the last spike happened, we know that an awful lot of people moved into the market because they felt they ought to get into the action. FOMO, said Janikowski, Jan Sikowski? Whose firm offers insurance against crypto thefts and scams? Ultimately, anything that causes the market to be aware or wider investment markets to be aware of crypto tends to be a good thing from our perspective. So don't call it a comeback. Bitcoin's been here for years. The third halving is on the way. What do you guys think? What is your thought process? How do you feel? What is coming in the future? A $10,000 Bitcoin, we've seen a $20,000 Bitcoin. The question is, will we break that barrier? Where we break that barrier, I think it's so important. I think it's important to understand. And I think this is important. If you made it to this part of the video, please like and subscribe. Please comment below. I don't care. Hey, Christian, hey, new Creation Capital Podcast. We hate everything about you, right? Or we love everything. Or let's make some money. Or join the Telegram group, guys. I think that's pretty cool. If you join the Telegram group right here, you can see we converse and we chart things and we ask people buying. We ask them for hitting 10K. We see what things are going on right now. So Daniel C is hitting us up. You know what? Let's write him right now. And what I'm going to do is show you what I do. So I have a current I have a current chart here that I'm going to post right here, and I'm just going to post the 5-minute and let him see it. And see, we are trying to build support right now at the 92.50 level, because that's what's going on in that chart. And then not only will I do that, I will also post another chart that I have right here that's also on the 5-minute that's going to show different sets of charting. And so we'll do that right here. We'll throw the trading view in there. Boom, there's my other chart. Okay, that's showing VPR. By the way, if I blow that up, we got the VPR here showing the visible range. We also have a level of support here. We got the parabolic SAR showing an uptrend. We have the 50 average moving average right here for this, guys, and we're trying to establish support right there on that. We had a deadly wick here, but we also look like we might be getting a head and shoulders pattern. So these are things that I talk about in the group. So please make sure you follow along on the Telegram group. It is right here in the description. Of course, you can find me on New Creation Cap. You can find me on the New Creation Cap is our Twitter, and you can find me on Publish OX right here on this platform. We can get our audio and our video. And before I go, I will read you this. This is Philippians 4:4. Rejoice in the Lord always. I say again, rejoice. Let your gentleness be evident to all. The Lord is near. Do not be anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present your requests to God. And the peace of God, which transcends all understanding, will guard your hearts and your minds in Christ Jesus. Amen, guys. Thank you so much for tuning in today. Make sure you stick around and watch the video at the end. Of course, my name is Christian Israel, and you are tuned into the New Creation Capital Podcast, a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. This, of course, is not financial advice, but we like to say make sure you buy low and sell high. Where we go one, we go all. This is a new future and a new creation and a new you. Let me try that one more time. A new you, a new future, and a new creation. Don't forget, guys, tomorrow, tune in for the interview from someone from a nice large crypto hedge fund. Okay, guys? Until tomorrow, until next time, guys. As always, peace and love. Later.
Let's just follow a $100 check. Make this real simple to the fellow that delivers our mail. The postal worker gets a $100 check. And he looks at this and he can't imagine in his wildest dreams that just 2 days ago that money didn't exist anywhere in the universe. But it's a government check now, and it's very spendable. So he takes it and deposits it into his private checking account at the local commercial bank. Now this money is out of the Federal Reserve mechanism per se, out of the government side of the partnership, and it gets into the private banking side of the partnership. $100 has been deposited. Now the action heats up. The banker looks at that and he goes over to the loan window and he opens it up and he says, "Attention everybody, we have money to loan." And that's good news for a lot of people, because that's one of the reasons we go to the bank, isn't it? To borrow money. So it's good news when there's money available. And the banker says, "We have $100 deposited, but don't worry folks, we can loan you more than that. We can loan you up to $900. Well, how? How can you loan out up to $900 when you only have $100 deposited? Well, it's not difficult if you're in the Federal Reserve System. Here's how it works. The Federal Reserve says that the member banks must keep no less than 10% of their deposits in reserve. So there's $100. They keep 10% in reserve, $10. And they can loan up to $90, right? So we loan it to you, ma'am. You borrowed $90. What do you do with it? Well, you want to spend it. So you want to write a check on it. You deposit it into your checking account so you can write a check. In many cases, it might be put directly into your checking account. But now there's $90 deposit, in addition to the $100 that was deposited to start this chain. Now we've got the $90 that was loaned as another deposit. Well, the Federal Reserve says that you only have to keep 10%, so we keep 10% of the 90, and loan the other 90%. And the person that borrows that puts it right back into the bank as another deposit. Well, the Federal Reserve says you only have to keep 10%, so you know, this goes around and around and around to the revolving door until finally the whole action is played out. And the bottom line is, when that $100 deposit comes in from the postal worker, the banks in essence can loan up to $900 because $100 is the reserve, and that's 10% of 1,000, so they can loan the balance or the difference, which is $900. Now, where does that money come from? Well, same place. It springs into being precisely at the point where the loan is made. It didn't exist before, anywhere. Now notice the important thing here. The money that's created out of nothing and given to the government spends for its purposes. But the money that's created out of nothing by the banks is not spent by the banks, it's loaned by the banks to you and to me, and we pay interest on it. Not too shabby. Interest on nothing. I wish I had a magic checkbook like that, where I didn't have to have any money, just a checkbook. And I could write checks, $10,000, $20,000, $100,000 all day long and loan them to you folks, and you pay me interest on it. You see? Not too shabby at all. This, in fact, is the payoff to the commercial banks in the cartel. This scam has become legitimized by law, and we're told it's a wonderful thing. We think our banking system is wonderful, but it's a scam. Not only interest on nothing, but perpetual interest on nothing, because notice, once this money is created, if you pay